I'm also a big fan of the way that Yale does business. I've learned a lot from Yale over the years in that, one of the things that I always notice about Yale is he makes decisions fairly quickly, and he doesn't leave people hanging. He's great at getting back to people, and I think that is a fundamentally important thing for CEOs. So Yale, I had to introduce you that way. Thanks for joining us.
That's great to be on your show. Thank you.
The reason that I had to introduce you that way, Yale, is I've recently become a CEO myself, and some of those lessons that I learned from guys like you in my reporting on the industry days, it impacts how I do my job today. So I guess I got to say thank you too for being a great example, Yale.
Oh, well, I'm going to have to follow you rather than you following me then.
So Yale, you're involved with some real great companies and doing some interesting stuff that I think is valuable for our audience. Before we get into that, though, I wanted to give you a little rundown on the genesis of this show, CEO Roundtable. As I mentioned, Yale, about a month ago, I became a president CEO of my first public company, a company called Alset Energy, symbols ION. It trades on the Venture Exchange. I think you should know about that, Yale, because you're on my email list.
Okay, I'm onto it.
There
I'm
you go.
onto it.
Well, what it is, Yale, is like the company was a sponsor of my website, and they ran into some issues where they thought they might have to spend about a couple $1 million per year to keep their projects down in Mexico for lithium in good standing. By restaking those claims, it brings the cost down quite dramatically. And when I heard that, I decided to keep them on as a sponsor and offer my services to help try to fix the company that had been, had a stumble. And I'm pretty excited about it. This electric vehicles and Tesla's efforts to build power walls and solar panels. I had a friend earlier today send me an email, Yale, and he was talking about how we might not need to run out of oil before we start moving into other ways to get around. And I mentioned that it's pretty remarkable what Tesla has been able to accomplish with their electric vehicles. And
Well, all of this comes down to in running any of these public companies, it's a CEO's job, or often the chairman's job, to create the vision, and of course management has to execute on this vision, and the shareholders typically buy into the vision, but they do need regular encouragement because there's a lot of product out there, not just in the gold space where I predominantly am, but obviously in the lithium space. So, and it takes. I know when I make a press release, and I'm involved in press releases with the three companies I'm involved with. It's a matter of every press release has to signal what's going to be in the next one, and you have to know when the next one's going to be. And if you can do that, your shareholders or investors can easily follow where you're going with the company. Sometimes people put out a press release and put it into a void because A, they may not know what they're going to do next, or B, they don't have the money to execute on what they're talking about, okay?
Exactly.
And then you come up with all the issues of dilution, and everybody says they don't have the money, they're going to have to dilute. I'm not going to buy the stock, I'll wait and participate in the financing. And all of these things come into it, which are the things way of simply drilling a hole and finding some lithium or some gold or zinc or whatever you're looking for.
The storytelling part of it is extremely important, and having an audience to talk to is important too, Yale. And that's why I've been so excited to be able to sort of merge my reporting with these CEO roundtables. Now I can have CEOs like you on, and we can chat about what's going on with our companies, and I can offer to my audience. They can learn more about two companies from a couple guys that are well informed and been in the business for a long time, and so everybody wins. My guest wins, my company wins, my reporting wins, and the audience out there wins by having great content. So I'm really excited about these CEO roundtables, Yale, and what the goal is in about 4 or 5 months of doing these CEO roundtables, I want to have a CEO summit where we can have a like a live stream of these interviews, and people can come and watch, or they can watch from the comfort of their own home. So, I do realize how important it is to keep investors informed and keep your name out there, and in front of investors and telling your story.
Well, certainly I've spent my share of time telling the story.
You got that. We've enjoyed many hours at conferences and past interviews, Yale,
Yeah, yeah.
chatting. So let's get on to what you're up to these days. And I'll just let you know the reason I called you recently, Yale, to come on the show was I had Adamera's Mark Kolobaba on a show just last week, and I was scrolling through the news as he was talking about the company, and I saw Yale Simpson, and because of our past success, I got a lot of people in my audience remember Xstory. Xstory was a spin out of Exeter, and Xstory was ultimately a successful exploration, then takeover. And so I've had myself and my audience have had a lot of good experiences with Yale's companies, Xstory and Exeter, who have been past sponsors of my website. And then so I saw your name come up with Adamera. Why don't you tell me why your name came up with Adamera, and a little bit more about that, Yale?
I think it was an old Ronson commercial or something like that where the fellow said, "I like the shavers so much I bought the company."
Okay.
And in a sense, with Adamera, I've been involved. I've known Mark since it was the days of Diamond North, and I was an independent director through all of that time, and an independent director then of when Diamonds North became Adamera, an independent director again, and then through these lean times, probably I was the most reliable investor to continue to come in and keep the company afloat in the tough times. And I ended up being either the largest shareholder or the second largest shareholder. And then I looked at it and said, well, Mark, I'll stand as chairman because I like the asset, and I think what Mark simply could benefit from was a little more strategic direction, and hopefully that I could give that. So that's how I ended up doing it. I mean, our whole business is about kind of area plays, and whether it was Voisey's Bay or things happening in the Golden Triangle of BC, or pick one. These area plays, not only do they make a lot of money for the company who directly makes the discovery, but they make a lot of money as it spreads through the industry, and people get an appetite for the commodity, despite what the gold price might be on the day. So that's what I saw as, when you look at northeastern Washington, and if you roll the clock back to the days of Battle Mountain Gold or Echo Bay, when they made the discoveries up there, they were spectacular discoveries, high grade, lots of market attention. And yet, through evolution of time, the area was consolidated into Hecla Mining and Kinross.
And they didn't do anything, or they didn't really produce anything that's going to get market attention, right, Yale, when they're doing the work?
They mined out the ore bodies that had been found, and in the case of Kinross, they're still mining out the last of the ore bodies, and they didn't do the sort of ongoing exploration, at least at a level that it would take to replace these ore bodies. And there is strong community support in that area for mining, not for open pit mining. They don't want to see big open pits. They want to see underground mines, but
And
that's okay
that
because
was
the
one point that Mark made in our conversation, was that he's working hard to really communicate that we're not looking at an open pit here. We're looking at high grade underground mining.
yeah, and that is precisely the attraction of these deposits. They are half to 1 ounce deposits. They typically are anywhere between 100,000 ounces and a couple of million ounces. But when you're into them, are they extraordinary deposits?
But there's also, and now I'm getting more about why Mark has been so diligent about doing all the pre-drilling work, Yale, is that Mark also is aware that these high grade, they're not big, they're narrow, they're high grade, and you've got to be able to chase these things. You got to understand the structure. You can't mess around with these things when you're drilling them, because you can miss them. And I think that now I'm starting. And in fact, they just recently did a. Mark was mentioning that they were doing a geophysical survey, which is compounded on other geophysics and other groundwork that they've done, and the structural work that they've done. And so they're really trying to pinpoint, or at least that's what I'm not speaking for them. That's what I'm getting the impression of, Yale.
Yeah, well, let me put this in a bit of context too. I was there about a month ago, and I was standing on the edge of a mined out ore body, which was mined out as an open pit, called Key East or Key West, one or the other. And that was a Kinross property. And as we're standing on the edge of this pit, I said to Mark, I said, where does our land start? And he says, the other wall of the pit.
Yeah.
Okay, so it's not as if you're saying 10 miles away or
Right.
10 kilometers away. It is right next to the pit.
Got it.
And I said then to him, how many, we talked about these deposits around there, and there's only a couple of them of this type actually came out of the ground. Most of them were hidden. And they are found by using magnetics alone, not using EM. And on a couple of these things, magnetics works really well.
Wow.
And in other ones, it doesn't, right?
Okay.
So the fact of the matter is, when you're doing, he's just done a combined EM and magnetic survey, airborne, helicopter supported, so he can get really good detail. But he's flying over the top of these old deposits that were mined not that long ago, like 15 years ago.
Yeah.
But we're looking for repetitions of these things that might only be 200 meters away from the deposit. And you're saying, well, how did he even get all this ground if he's within 200 meters of an ore body? Well, it's because nobody's looked at that area except Kinross, okay, and Hecla, and Hecla aren't doing anything anymore.
Well, and it's always a balance sheet equation with them too, right? Yeah. For you and me, it's where can we go and find ounces in the ground? For them, it's, well, do those ounces matter to us? Where can we got money we got to spend over here? That's a big variable, and why these good things that an explorationist like you and me, we're all over it, going, what the hell were they doing? Why weren't they doing this?
Well, that's why we have a junior mining sector, because we can pick some little niche of northeastern Washington and build a company around it. And whereas where a company like Kinross, with full appreciation of Kinross's challenges, they had the Mauritania acquisition, and they had various things. They've got about 6 mines that are closed, and they're remediating those, and that's a cash drain.
That's a cash drain.
All of those.
They don't have money to spend on exploration somewhere else.
Yeah.
I think you brought up another good point too, Yale, is Mark and I have a lot of experience in diamonds, and finding those diamond bodies are not that easy. You're looking for literally needles in haystacks of haystacks. And so if anybody is looking for those, underground treasure troves, they got a heck of a good guy there in Mark Kolobaba.
Well, I think the other thing where investors might want to have a look at it is that he's got. One would anticipate that he'd have multiple targets coming out of this. Because one thing I'll say about geophysics in all the years I've been doing work, you always have targets.
No.
That's not a problem.
Yeah.
Okay? Geophysics, the trick is combining that physical target with the geological target with the geochemical target, and now you've got a real target,
Yeah.
right? As against just another anomaly. But
And that's how
I'm
things
hedging.
are lining up for them. They'd have
Yeah.
more than one of these where they're getting the structure, they're getting the sampling, and they're getting the geophysics all lining up nicely.
Well, I must say, I've been in the industry for, I started looking at gold in 1975 in Australia. In my time, I haven't seen a more slam dunk kind of exploration play than what Adamir is doing right now.
Wow.
The trick will be, can he make a discovery on his first hole, or is it 50 holes? Okay, you don't know that. Okay,
yeah.
But it's an absolute slam dunk that there's more ore bodies there. It just would defy any logic that there's not more. Just like if you look at the Golden Triangle, BC, of course there's more ore bodies there,
Yeah.
right? Just add money and stir. Of course there's more ore bodies there. It's the same in northeastern Washington. The beauty being that he's the only junior there.
Got it. And he was there when nobody was going in there. So when you go in there during a bad market, you can come out in the good market looking a lot better. And that's sort of what I'm seeing for Adamera.
Yeah, and I look at Mark. He's a relatively younger guy compared to me, and I think he's one of the rising younger executives. And you followed the diamonds, and when Adamir was
Mark has found a lot of kimberlite bodies. That's what I'm getting at is to find those small, sometimes dikes, sometimes they're thin dikes that or sills lying on their side, or kimberlite blows that are small, or they lay over. They're hard to find, and he's found a lot of them. So that's the point I wanted to make. You're making the point about the quality of the area. I'm making a point about this target selector and his ability to find stuff with the drill hole.
Yeah. Well, I think the answer was stay tuned to news releases, because I think he's going to have a lot of news flow as it relates to this survey with respect to the sampling he's done, with respect to target selection. So stay tuned.
And literally year-round exploration potential.
Well, he's doing a survey up there right now.
In the middle of winter, yeah.
It's finished today or finished yesterday, but he's doing it. And there might be a bit of snow on the ground. That doesn't matter. He's got an airport only about a kilometer away from where he's doing the survey.
Well, he's used to working up there in the cold, so I think Mark will be well. He'll be okay. So that's great. I really appreciate your insight into Adamera there, Yale. And another company you're involved with is down in Columbia. It's rugby. And what's interesting to me about that, Yale, I think we're coming into an exploration renaissance for gold. We've seen a long period of underexploring and a lack of, almost similar to what you were talking about in Western Washington or in northwestern Washington there. Because those majors were in there not doing any exploration work and just mining out those ore bodies, now they're basically going to be gone from there, and they won't be mining there anymore. And that's sort of what's been going on in the industry, where there hasn't been enough exploration worldwide. There's not enough new discoveries to replace what's being mined every year. And so we've already started a significant decline in annual production that is projected to continue forward for a number of years, regardless of the price of that gold goes to. And I really think the thing that's needed the most right now in the industry is serious exploration. And Colombia is an interesting area, but the concept of it used to belong to Barrick, and now it belongs to Rugby, and you're doing some exploration. that's an interesting thing for my investing audience to think about, Yale. Why don't you put some color onto that for them?
Okay, well, let's back up. So rugby has been involved. Rugby's around, and who owns rugby, by the way? It's the founders of rugby are the founders of Exeter and Extory, right? So we put it together as a junior explorer to do all the things that Exeter wouldn't do because Exeter is focused on a big asset in Chile. So we didn't see any conflict of interest. And
I'm going to interrupt you for a second, Yale. The symbol for rugby is RUG, and they trade on the Venture Exchange. And while Yale is talking, I've just pulled up their website. So sorry about that. Go ahead, Yale.
Yeah. So we have been, and rugby, and the chairman of rugby is Bryce Roxburgh, who's a co-chairman of Exeter with me. Okay. And Bryce has superb exploration instincts. He's one of the original explorationists, as you call them, who just seem to have an ability to tag on to numbers and numbers of ore bodies. And of course, in the life of Exeter and / Extory, in that we had 3 discoveries. Okay, and that's just continuing what he's done in his career. So when we put rugby together, and I think the insiders of rugby, between Bryce Roxburgh and me and others, I think we have about 40% of the company.
Oh, wow.
A big position in the company. We started looking at Colombia, I'm going to say 4 years ago, and identified a porphyry trend, a copper porphyry trend, and did a deal with Rio Tinto to pick up some land there. So it was a Rio Tinto, in a way, introduction into that area. Rio Tinto had problems in the permitting side. They're a high-profile company. For anybody who doesn't like mining, you can target Rio Tinto, okay?
Yeah.
Whereas the juniors had to fly under the radar. And so that's what took us into the country. And we're relatively optimistic that certainly by next year, we'll be drilling the first of the big copper targets that we have originally went into the country for. We're waiting for a forest extraction permit. But in the meantime, while we're waiting for that, we have kept our nose to the ground. We kept a presence in the country. And when Barrick decided to exit many assets, and it's not just exiting Colombia, but they exited largely out of Australia. They sold their mines there. They were selling operating mines for $50 million.
Yeah, Premier.
A couple of million. Yeah,
I think Premier Gold bought one of their mines, I believe. I might be wrong.
Plutonic in Australia was a producing mine with 2 million ounces. I think the number was close to $50 million is what this company paid for it, and the company who bought it now has a market cap of over $1 billion.
Well, that's an important point, Yale. Like, there's so many opportunities out there that the majors just, it doesn't make any sense to them. But these are company building assets. That's sort of what one of my sponsors I just mentioned, Premier Gold. In fact, I'm having you and Downey on a show tomorrow. That's sort of been their model on acquisitions, and there's a lot of opportunities out there for mid tiers. There's a lot of opportunities out there for juniors that they've got these warehouses full of projects that just don't make sense to them, but could be company makers. So, look, there's that company in the Papua New Guinea, I think it is, that K92. That's an old Barrick project that they've recently brought back into production. So I think that's something that investors want to look at as well, Yale.
Well, yeah. So what happened because Barrick were divesting of operating mines, and it was to correct the imbalance in the balance sheet and all of that. Those are, I won't go into all of Barrick's corporate machinations.
Yep.
But they decided to sell assets, and of course, if you're selling assets to bring in cash, the last thing you're going to do is squander money on exploration. If you're an accountant, that would be your view.
Yeah.
Right? So, because rugby as a junior had been hanging around, if you like, in Colombia, waiting to get permitting in place to drill its porphyry, this copper porphyry. The opportunity came up to buy Barrick's subsidiary. So they didn't just buy one project; they bought all of their projects. Some of which were applications, most of which were applications, because they hadn't bothered to perfect the applications, but one could do so. And they had some granted concessions, and Rugby acquired the whole lot, including once Barrick had paid off their staff, Rugby had the opportunity to hire back anybody that they wanted.
Oh, wow. Okay.
Right, so you ended up with this, I don't know,
so projects and the people. You got the people and the projects.
But you didn't have the liability. There was no liabilities remaining in the company. That had all been settled by Barrick. So you ended up with, okay, all of these properties, let's start going through them and determine which ones are best for us. Now, of course, junior companies aren't looking for 2 billion tons of very, very low grade. They're after high grade. And so Rugby put on a high grade hat and started to review all of these projects, looking for the vein systems or the high grade drill holes to see, out of that what could be an immediate target. So that is ongoing. You see, if you follow Rugby's press releases, you'll see references to acquiring another area. In fact, we acquired another area recently called San Antonio, which was a tack-on to one of the Barrick licenses. Barrick identified gold and mineralization, but when we went up to look at it, we said, hey, this keeps going. It goes right off of their land into some other land. And so we did a deal with the owner of that, and that's part of that project. So, and that's how these things evolve. But, when you talk about juniors acquiring these kinds of assets or portfolios, it's what, when we put Exeter together, Exeter had two discoveries. One in the portfolio of properties that we bought from Anglo Gold, and we bought that portfolio of 26 properties for $100,000.
Wow. Okay. And that was probably in the bottom of another market, right, Yale? Yeah,
it was. It was in the bottom of the market, and that was in Argentina.
Okay.
And then to make the discovery in Chile, the Caspiche discovery, we went to Anglo-American. Anglo-American had properties in their drawer. We took on 7 properties, and that led to the discovery of Caspiche, which is arguably the last of the big discoveries made in the last mining cycle, right?
Great.
So it's an old formula. Bryce's view of it has always been, I know when we did the deal with Anglo, he never even looked at the property. He said, I don't need to look at it. Anglo have had this for years. We'll just do the deal.
Yeah.
And the deal was with no cash down, just drill 5,000 meters within X numbers of years.
Yale, that is what I call one of those fall in your lap kind of opportunities. And I those are usually the ones that have turned out really good for me in my career. The company I recently became president CEO of, Alset Energy, it's one of those fall in my lap kind of deals where, I'm a diamond and gold exploration guy, and when I'm looking at maps and stuff like that, I'm looking for fine details. To do this, I was doing my homework on one of the projects, and they said, well, it's 100 kilometers north of Zacatecas. So I put my ruler on Google Earth, and I go 1 kilometer north, and from zoomed way out, I can see the Salar right there, the Salt Lake right there. I do my exploration with Google Earth. Yale, for me, this is incredible. You can go up and bulk sample it right away. You can start to get the reality of the project, and it's sitting right there. I mean, when they ran into some tough times, I'm a project guy first. I looked at the projects. I said, nothing wrong with the projects. If you guys want me to run this thing, I'm in, because by then all the hot money had been beaten out of it. So those are the things you got to look for, and keep your ears open for those opportunities in this business, Yale, because they do come about.
But often I'll say the task is to get the attention of the major, and usually it comes about not because the junior is seriously cashed up. It's often because there's some credibility in the management of the junior where they say, okay, well, Bryce, in this is the case of Bryce Roxburgh, Bryce is a solid guy. He's been around a long time. He can, if he ends up with all these properties in rugby,
he's going to
he won't
do
embarrass
some.
us. He won't embarrass us.
Yep.
He won't screw it up.
Yep.
He won't do this. So let them have it, even though they're getting it through.
Oh, absolutely. That's why those opportunities fall in your lap, right, Yale? Because you've done things right for a long time, and that's why they do. But you started talking a little bit about Exeter. Exeter has been why we've been sort of hanging out for a long time, Yale, and um, there's an interesting couple things going on with Exeter that I think is instructive for the investors out there in my audience. One of them is that you've got this huge, very large ore body, and there's a couple ways to go about attacking this. And there's one that's less expensive. But the other point that I wanted to make is about lately there's been some companies that we call optionality type plays that are starting to get better valuations in the last 9 months or so, and Exeter's been one of those. Let's delve into those issues a little bit, Yale.
Well, Exeter has. Well, when you look at the run up that we enjoyed, in the 6 months until the recent pullback, Exeter went from 30 cents to close to $2, right? And they didn't have to drill a hole to do that. That was the optionality on the gold inventory, right?
Yes.
And people understood that very well. And the largest shareholder of Exeter is Sun Valley Gold. Sun Valley Gold has made their business around the long-term holding of assets and using that optionality. You may remember a company called Arizona Star.
Oh, absolutely. AZS.
Way back when.
Yeah, AZS. I remember it very good.
Well, Arizona Star owned 50% of a deposit called Cerro Casale. Cerro Casale turned into a 1 billion-ton gold property with some copper. And at the time of the discovery back in the 90s, the share price ran up into, I'm going to have a stab at it here, from nothing to about $7 or $8.
Yeah, I think it might have even been. I think it was plus $10, Yale, if my memory.
Okay. Well,
yeah.
That's even emphasizes the point even more.
Yeah, it was
so
a huge.
By the time 2002 came, when gold price hit its bottom, the stock was sub 50 cents, even though they had this huge deposit. Like I said, 50% of it, the other 50% being held by Kinross. Okay. And so what happened was, with the run-up in the gold price over that delightful 10 years that we all remember so well, the stock went to $18 and they were taken over by Barrick. They didn't have to drill another hole. Okay. It was this whole play on the big gold inventory. Now, the advantage of that was that gold price drove it and drove the valuation higher, but also the gold price made it possible to build these mega projects that the likes of Barrick could go ahead, and whether it's Pascua-Lama or any of the other ones, that there was the money around to finance these things. And of course, Barrick in particular got all sorts of strife over Pascua-Lama. I'm still trying to figure out how to build it. But the whole thing was, our largest shareholder is Sun Valley Gold, who was also the big beneficiary in Arizona Star.
Okay, got it. So they're long-term thinkers that are willing to buy ounces in the ground at the bottom of markets, wait for them to improve.
Yeah, and what made our project different from the one that Arizona Star subsequently sold to Barrick, the one I referred to as Cerro Casale. And Cerro Casale is only 10 kilometers from Exeter's
Caspiche
project. Caspiche is big. It's a huge gold inventory, gold equivalent in the order of 40 million ounces. But the advantage of Caspice is that, unlike Serra Casale, Caspice has kind of various development options. It's got an oxide cap layer on top that's about 1.7 million ounces, and that can make a standalone mine 10 years production of somewhere in the order of 125,000
And
ounces
that's
a year.
something, Yale, that I think people don't really understand when it comes to that oxide cap, is that they look at it, well, is that a plan B? Well, if you had 1.7 million ounces of heap leachable gold, you'd be pretty happy with that, Yale. So
Yeah,
yeah, I don't understand sometimes the mentality of the way people look at things.
well, yeah, but people like a fresh story,
Mm-hmm.
and they get in mind something like Caspice, and they say, "No, Caspice, yeah, it's something like 40 million ounces, but it's a big low-grade monster in Chile, and it's at 14,000 feet. What's your next story?" And had it been, if you were telling the story today for the first time, and said, "Okay, here's stage one, development of this heap leach, and then one would deepen the pit, take some transition ore, that would keep you going for another 6 or 7 years, and then eventually you're going to dive into the big sulfide deposit underneath." If that was a story that nobody had ever heard of before, they'd pile into it. Okay?
Well, Yale,
So
there
that,
you just
yep,
gave my audience another lesson. What you're
yeah,
describing there is the way a strategic thinker is thinking about investing in this business, like the Sun Valley you mentioned. They're
yep.
looking at it and saying, okay, they're just looking at, and that's a problem that I think a lot of people in the business get at, Yale, is they're sort of comparing this to that, apple to orange over here. I try to look at each project individually on its own merits. And that's so for Caspice, I'd be looking at it. Okay, what's the reality of this project? I bet you that Sun Valley was buying in when they were buying in at less than your cash value. I mean, this
They
is
were buying
how
it at 30 to they were buying it at 30 to 60 cents a
when
share,
when you had
and it
80,
went, and within 6 months it was at close to $2,
right,
and they still have all their stock.
right.
Okay?
So see, therein lies how to really Yale. This making money in this business isn't about jumping on the latest homework before the crowd gets there. And that's what I'm trying to portray here about Caspice and a company like Sun Valley and what our investors out there should emulate. I think we've got to get more strategic. I don't think we're going to have one of those markets of gold bull markets, Yale, where everything is moving with if they've got moose pasture or whatever. I think investors going forward are going to want to think like those strategic investors that are looking at it from the reality of the bottom line of each
Well, I
individual
think,
project.
yeah, you're right. By the way, there was one other thing that attracted Sun Valley is Exeter at the time had $20 million in cash in it. So they didn't have to, and they hadn't raised any money for 8 years. And Exeter was not something where dilution was going to hit you the next day, and you say, "Oh, geez, if I'd seen that coming, I would have waited for the private placement and got a warrant." Right?
Well, and that
So
makes Exeter a little different than most of the optionality plays out there. You guys don't have to worry about money.
no, that's right. So
Okay.
interesting, Alan, when you look at how you're talking to CEOs and getting their views of the world. I do really enjoy the exploration plays, the driven by the drill bit, the absolute euphoric excitement that comes out from a discovery, and that's why I'm involved in Atamera.
Yeah.
It's that kind of a story.
And rugby. Rugby's
that's right, and rugby is the same.
yeah.
It's going to be one of those things that will rugby be successful? Yes, it will be successful. Will it be a win? Oh, yes, it will. When? Well, I'm not quite sure.
Still working on the timing thing, are you, Yale?
Yeah, but I have very little doubt because rugby has.
Hold on,
like
Yale.
In particular,
I got a question for you.
Yeah.
You just made some very confident comments, and I think that that's important for investors to be able to understand their company so well that they can make those same confidence. So, what is it that gives you, just quickly tell them, what is it like if we were on an elevator pitch, Yale, about them that, gives you that confidence?
Well, I mean, I'm a geological engineer by trade, and I've spent 40 years in gold. Okay, gold exploration and development. So it all comes down to what your database in your brain is telling you. And so when I look at a play like all the land and what have you that rugby has between the copper belt and the gold belt and the barrack stuff, I look at that. And of course, there's ore bodies in there. Of course there is. Look how much land you've got, and you're right in the main gold district. So, will you be successful? Yes. Will it be right away? I hope so, but it could be. Could be longer. It's all to me about what is your collective experience. It's no different from Adamira. If you got an ore body 100 meters away and another one 5 kilometers away, don't you think there might be one in between?
And that I wanted you to say stuff like that, Yale, because as an engineer, look at what you're breaking it down to. What you just reminded me of how, Warren Buffett talks about the investments he makes. He says, Coca-Cola, it's sugar water that we've been selling for 100 years, and 100 years from now, they'll still be selling it and making lots of money off of it. He doesn't make it real complicated, and I like that, Yale, and I think that's a good note for us to end on. This has been you've really brought our audience a lot of great stuff, Yale.
But, the reason I'm on is because I haven't talked to you for a while, but also, if your people want to get on their laptops or their iPads, have a look at those 3 companies. I'm a believer in them, and I think you could do worse than owning some shares in them. But that's I'm not an investment advisor. I'm just an enthusiast.
Yeah, and I appreciate that, Yale, because I'm one who always pushes to do your homework too, and I agree. That's why I had you on the show, Yale. You're always involved in really good things, and you've been doing this for a long time. You've had a string of successes over your career. You've just brought a lot of great information to our audience, and I'm going to invite them all to check out Exeter Rugby and Adamera, where Yale's involved with all of them, and he's involved with them for real good reasons. So check out all those companies. And Yale, thank you very much. And I'm going to try to twist your arm to keep coming on periodically, and definitely consider that CEO summit. We'll probably do it in Vancouver or something like that.
Okay. Well, let me know.
All right.
Thanks for talking.
Okay, yeah, I'm gonna wrap things up, and thank you very much for coming again. I'll hang up on you, Yale, and I'll send you a link to the once the video's up.
Thank you.
Awesome. Have a wonderful day, Yale.
Thank you.
Bye-bye.
Bye.
All right, folks. Well, there again, we've had another great guest in Yale Simpson, someone who I think very highly of. I've watched his career over the years. He's done tremendous things. And he's also, with our interactions and emails and phones and at conferences over the years, Yale has also been someone who has set an example to me of the way you want to run public companies. So I was really glad to have Yale on today. I also want to say thank you to my various website sponsors. They make my work possible. They include the 2 companies where I'm the president and CEO, which is Allset Energy, ION on the venture, and also Advanced Gold, which is AAX on the venture. And other sponsors include Nevada Exploration. They're focused on gold in Nevada. They're using a new unique gold exploration method to unlock Nevada's underexplored regions. You can visit them at nevadaexploration.com. Premier Gold Mines, I mentioned them earlier in the show, is a sponsor. They're gold focused. They have an enviable portfolio of projects from exploration through to mining in Ontario, Nevada, and Mexico. You can visit them at premiergoldmines.com. Sirius Resources, SOI on the Venture Exchange. gold focused. They're drilling the high grade project at the Chichu Gold Project in Quebec that's located next door to Goldcorp's Eleanor project. You can visit them at Sirios.com. That's SIRIOS.com. Tarku Resources, TKU on the venture, is a grassroots gold explorer in Quebec. They're near an old mine and a recently built road that's being built to open up Quebec's first diamond mine, which has recently started production. You can visit their website at Tarku Resources. That's TARKU resources.com. Tudor Gold, TUD, is another sponsor. They're a gold exploration company with a portfolio of projects in the heart of the Golden Triangle of British Columbia. Their founder is Walter Storm, who also founded Osisko. My audience out there will know the Osisko because I followed it from very early in their exploration success through to when they were taken over. Check out Tudor Gold at tudor-gold.com. West Red Lake Gold Mines is another sponsor. They trade on the Canadian Securities Exchange. Their symbol's RLG. They're gold focused. They're drilling the high grade Hinge Zone target in Red Lake, Ontario. Goldcorp is their partner. Goldcorp owns 40%. West Red Lake has a 60% interest. You can visit them at westredlakegold.com. And Wolfden Resources, last but not least, WLF on the venture is my final sponsor. They're base metal focused. They've got a high grade discovery of nickel, copper, and cobalt near Snow Lake, Manitoba. You can visit them at wolfdenresources.com. On that note, I just want to say finally thank you to my audience. You make this show worth doing, and thank you very much for checking us out today. Have a great